Hello, and welcome to Explain the Charts, your go-to channel for in-depth technical and fundamental analysis. Today is November 6th, 2025, and we are diving deep into one of the world's most watched stocks, Apple, ticker symbol Apple. We'll start with a breakdown of the major news and events swirling around the company, and then we'll hit the charts to see how those headlines are translating into price action. First, let's talk about the news, which has been overwhelmingly positive lately. Apple recently reported a record fourth quarter, beating analyst expectations on both revenue and earnings per share. This strong performance was largely driven by robust sales of the new iPhone 17 and a significant surge in Mac sales. Adding to the bullish sentiment is a massive, reported $1 billion deal with Google to integrate its Gemini AI to supercharge Siri, which could be a game-changer for Apple's AI strategy. The company also has a massive $100 billion share buyback program in place, which is typically supportive of the stock price. However, it's not all clear skies. Some reports highlighted a dip in China sales, and analysts remain divided, with a consensus, moderate buy rating but a very wide price target range, from a low of $180 to a high of $345. Furthermore, with AP ratio hovering around 36, many analysts consider the stock to be expensive at its current valuation. Now, let's turn to the daily chart to see the bigger picture. Looking at the past year, we can see a clear and powerful uptrend. There was a period of intense volatility and a significant dip back in early April 2025. This sharp sell-off established the 52-week low for the stock right around the $169 level. However, the recovery from that low was just as aggressive as the drop itself, demonstrating strong underlying demand for the stock. The price then embarked on a steady climb, setting higher highs and higher lows throughout the summer and into the fall. This bullish structure culminated on October 31st, when Apple's stock hit its current all-time high of $277.32. This peak coincided perfectly with the release of their stellar Q4 earnings report, a classic case of buy the rumor, sell the news, as the price has pulled back slightly since. Let's zoom in on that period of volatility in April to understand the market psychology. Here on the daily chart, focusing on the candles from April 1st to early May, we can see the dramatic price action. The drop on April 8th was particularly severe, with a massive red candle and huge volume, indicating panic selling. But look at the candle the very next day, April 9th, a massive green candle with even higher volume, showing an immediate and powerful reversal as buyers stepped in aggressively. This created what we call a V-shaped recovery, a very bullish sign that indicates the market quickly rejected those lower prices. This $170 to $180 zone has now become an incredibly strong long-term support level for Apple. Now, returning to the full daily chart, after that April recovery, the climb has been more methodical. We established a new level of support in early September around the $226 mark before continuing the ascent. The move in late October was particularly strong, breaking through previous resistance levels with conviction. The price is now in a consolidation phase after hitting that all-time high of $277.32. The immediate question for traders is whether this is a healthy pullback before the next leg up, or the start of a more significant correction. The primary resistance level to watch is, without a doubt, the all-time high at $277.32. On the downside, we're seeing initial support forming around the $267 to $269 area, which has been tested over the last few days. A more significant support level sits around the $255 to $258 zone, which was the peak in late September. Let's switch to the 1-hour chart to get a closer look at the recent price action since the peak. Here we can see the sharp decline from the $277 high on October 31st down to the $266 area on November 3rd. Since then, the price has been trading in a relatively tight range, finding resistance just below $272 and support around $267. This tightening range suggests that a significant move could be coming soon as the market decides on its next direction. The volume has been decreasing during this consolidation, which is typical before a breakout or breakdown. For short-term traders, the boundaries of this range are the key levels to watch. A break above $272 on the hourly chart could signal a move to retest the all-time highs. Conversely, a break below the $267 support could open the door for a drop towards our next major support level around $255. Drilling down even further to the 15-minute chart, we can analyze today's intraday action. The price opened today, November 6th, around $269.80 and has been chopping back and forth without a clear trend. We can see multiple tests of the $270 level, which seems to be acting as a short-term pivot point. The price action is very compressed, reflecting the indecision we saw on the hourly chart. For day traders, scalping between the minor intraday support and resistance levels could be a strategy, but the real opportunity will likely come from a breakout of the larger range we identified on the hourly chart. Patience is key in a market condition like this. It's often better to wait for confirmation of a move rather than trying to predict it in choppy waters. So, let's tie it all together with a recap of the key levels and potential scenarios. Your critical resistance level is the all-time high at $277.32. Your primary support level is the recent low around $267. If that level breaks, the next major support zone to watch is between $255 and $258. Here is my unbiased take on the probabilities. The bullish scenario involves the price holding above $267 and breaking out of the current consolidation. Given the strong earnings, AI news, and buyback program, I would place the probability of retesting the $277 all-time high in the coming weeks at around 60%. A convincing break and hold above $278 would signal a continuation of the uptrend, with psychological targets at $280, $290, and even $300. The bearish scenario would be triggered by a decisive break below the $267 support level on the daily chart. This could indicate that the high valuation is weighing on investors and could lead to a deeper correction. The first target for bears would be the $255 support zone. I'd put the probability of this scenario playing out in the short term at around 40%, but this would increase if we see broader market weakness or negative news. Things to watch for going forward will be any updates on the US-China trade relations and any further details about the execution of their AI strategy with Google. Also, keep an eye on institutional buying and selling reports, as they can often signal the next big move. That's our analysis of Apple for today. Thank you for joining us on Explain the Charts. If you found this analysis helpful, please remember to like, subscribe, and hit the notification bell so you don't miss our future updates. Please remember, this video is for informational and educational purposes only and should not be considered financial advice. Trading and investing involve risk, and you should always conduct your own thorough research before making any financial decisions. We'll see you in the next video.